On March 7, two completely different Social Security stories collided, and one of them could wipe out an entire monthly check. Most people are mixing the events together, and that confusion is dangerous. One change involves overpayments and allows Social Security to withhold up to 100% of benefits to recover money it says you owe. The other change is a massive internal overhaul that reshapes appointments and claims processing for more than 72.5 million beneficiaries. Today I will separate the facts, explain who is at risk, and show you how to protect your deposits before the new deadlines arrive. Welcome to Senior Security Benefits. I'm George, and this channel is for people over 50, retirees, future retirees, and family members helping parents navigate a system that is often confusing on purpose. You will not get political talking points here, and you will not get Wall Street hype. You will get clear explanations, real numbers, and practical steps you can take. If you want early warnings about rule changes, processing delays, Medicare interactions, and benefit strategies, subscribe now. It costs nothing, but it can prevent costly mistakes. Share videos with anyone who depends on Social Security for food or medication. Here is the roadmap. First, we will cover the overpayment policy linked to March 7, 2025, because that is the one that can stop a deposit. Next, we will explain the March 7, 2026 operational overhaul, including the National Appointment Scheduling Calendar and the National Workload Management System. Then we will touch the Fairness Act, identity verification changes, and a few 2025 rule updates that affect working beneficiaries. Finally, I will give you a short action checklist so you know what to do today, not later. These topics sound technical, but they control how fast you get paid and protected. An overpayment happens when Social Security sends you more money than you are legally entitled to receive. Sometimes the cause is obvious, like unreported work income, a change in living arrangement for SSI, a child aging out, or a marriage that changes eligibility. Other times it is not your fault at all, such as delayed processing, incorrect earnings data, a computer mismatch, or an employee error. Regardless of why it happened, the law gives SSA the right to recover the overpaid amount. The fight is about how they recover it, how fast, and whether you can stop collection in time. For years, SSA often defaulted to aggressive recovery by withholding the entire monthly benefit until the debt was repaid. In 2023, the default recovery rate for many beneficiaries dropped to a smaller percentage, giving people breathing room. On March 7, 2025, Acting Commissioner Lee Dudek announced a return to full withholding as the default for certain Social Security overpayments. Starting March 27, 2025, new overpayment determinations could trigger 100% withholding unless you negotiate something different. If your overpayment was already established before that date, your existing rate generally stays the same. So the notice date matters, not rumors online. If you get an overpayment letter, do not ignore it. You can ask for a lower recovery rate if full withholding would prevent you from paying for housing, utilities, food, or medicine. You can file an appeal if you believe the overpayment decision is wrong. You can request a waiver if the overpayment was not your fault and repayment would cause financial hardship. Deadlines matter, and many notices give you 60 days to request reconsideration. In most cases, SSA pauses collection while a timely appeal or waiver request is pending, so acting quickly is protection. Call 1-800-772-1213 to start today. To reduce your risk, report changes immediately, especially work income, address changes, banking changes, marriage or divorce, and living arrangement changes for needs-based programs. Keep copies of what you submit and write down the date, time, and name of anyone you speak with at SSA. Check your bank deposits and your benefit letters, because small errors can become large debts if they continue for months. If you use direct deposit, make sure your account stays open and your routing numbers are current. Set up your My Social Security account at ssa.gov to monitor notices and benefits online, without waits. Now let's move to March 7, 2026, because this is the change people misunderstand. SSA is not changing your payment date on that day, and it is not rewriting the benefit formula. The agency is changing how it handles work internally. For decades, SSA relied on 1,230 field offices, each with its own appointment calendar and backlog. That structure made service inconsistent and often unfair. Add staffing losses, retirements, and demand from baby boomers, and the system has been creaking. The 2026 overhaul is meant to spread work across the nation, so one overloaded office no longer slows everyone down. The first new tool is the National Appointment Scheduling Calendar, often shortened to NASC. Under the old model, when you called for an appointment, you entered your local office's queue, and your wait time depended on that office's staffing and backlog. Under NASC, appointments are pulled from a national pool. Many services can be handled by phone, and the appointment may be with a representative in another state who has capacity sooner. The goal is faster access and more consistent service across zip codes. SSA also plans more self-scheduling options, so beneficiaries can pick times without sitting on hold. The second system is the National Workload Management System, often called NWMS. This is about work already in the pipeline. Today, many claims sit inside a local office's to-do pile, and if that office is backed up, your case is backed up. NWMS is designed to identify idle work and redistribute it to staff in offices that have available capacity. Your retirement claim, survivor claim, or replacement card request could be processed far from your hometown, but the promise is speed. If it works, fewer cases will age for months simply because one office is short-staffed at once. Think of the old structure like 1,230 separate restaurants taking orders only from their own neighborhood. Some are overwhelmed, while others have spare capacity. The new structure is a central dispatch that routes work to wherever staff can handle it fastest. That sounds great, but there are concerns. Training thousands of employees on new tools can create temporary slowdowns. And some processes, especially disability, involve state partners and state-specific workflows. If a case is routed to someone unfamiliar with your state's process, it may require extra back and forth. Expect improvement, but plan for turbulence during the rollout anyway. Here is who will feel the March 7, 2026 shift the most. People filing new claims, people appealing a denial, people reporting changes, and people requesting appointments for complex issues like survivor benefits, auxiliaries, or representative payee matters. If you are simply receiving your monthly payment and you have no open action with SSA, you may not notice anything at all. Your direct deposit schedule is still based on your birth date and benefit type. The overhaul is about internal routing, not about changing your monthly amount. If you need SSA help soon, act early and keep copies of everything. Identity verification has tightened for sensitive transactions, especially direct deposit changes. In the past, many updates could be handled by phone after answering personal questions, and that convenience also made fraud easier. Scammers learned how to impersonate beneficiaries and redirect deposits. To reduce that risk, SSA is pushing more transactions through secure online channels and sometimes in-person verification at a field office. The security goal is good, but the practical impact can be delays for people without internet access or transportation. Your defense is setting up My Social Security at ssa.gov and protecting your login like a password always. Next is the Social Security Fairness Act. For decades, two provisions called the Windfall Elimination Provision, or WEP, and the Government Pension Offset, or GPO, reduced benefits for some people who also received pensions from work not covered by Social Security. Teachers, firefighters, police officers, and other public servants were common examples, along with spouses and surviving spouses. The rules were complex and often delivered surprises at retirement or after a death. A 2025 law ended WEP and GPO and applied adjustments back to January 2024. If you have a non-covered pension, recheck your eligibility and payment amount today carefully. If you are in that group, do not assume SSA automatically has everything it needs. Some people will receive increases and retroactive payments without doing anything, but others may need to file, update records, or correct pension information. If you delayed claiming because WEP or GPO made the benefit seem pointless, revisit your strategy now. Use ssa.gov to review your status, and call SSA if you cannot access information online. Keep records of your pension and covered earnings. Survivor and spousal benefits have separate rules, so ask how the Fairness Act applies to your case before you make a decision. Let's touch a few 2025 updates that still matter. The Cost of Living Adjustment, or COLA, increased benefits at the start of 2025. Even a modest COLA matters because it compounds over time and affects spousal and survivor amounts tied to your record. A 2.5% increase on a $2,000 check is about $50 a month, which is real money when groceries, housing, and prescriptions keep climbing. COLA is not a bonus. It is an inflation adjustment based on a formula, and it does not always match your cost increases. So plan conservatively and keep a cushion. If you are collecting retirement benefits before full retirement age and still working, the earnings test matters. In 2025, if you are under full retirement age for the entire year, SSA withholds $1 in benefits for every $2 you earn above $23,400. People hear that and think the money is gone forever, but that is not usually how it works. After you reach full retirement age, SSA recalculates your benefit and can credit back months that were withheld by increasing your payment. Still, the withholding can disrupt cash flow, so plan for it and track your earnings closely. Full retirement age is the age when you can receive 100% of your primary insurance amount on your own record. It is not the same for everyone. For people born in 1960 or later, full retirement age is 67. For people born earlier, it can be 66 plus additional months depending on the year. You can still claim as early as 62, but the reduction is permanent and can be close to 30%. If you delay past full retirement age, you earn delayed retirement credits that increase your benefit by about 8% per year until age 70. Because identity theft is rising, scammers are also getting better. If you receive a text, email, or call claiming to be from Social Security, do not click links and do not give information. Hang up, delete the message, and go directly to ssa.gov or call 1-800-772-1213 using a number you looked up yourself. Social Security will send letters, and those letters matter, but random links do not. If someone pressures you, threatens arrest, demands gift cards, or claims your number will be suspended, it is a scam. Protect your account like you protect your bank. Freeze credit if you need. Before March 7, 2026, handle any SSA business early. If you plan to file for retirement, survivor, spousal, or disability benefits, start the process before the transition so you are not caught in a learning curve. If you are appealing a denial, submit evidence promptly and confirm SSA received it. If you must change direct deposit, use your secure online account and verify the update. Report earnings and life events immediately and keep proof. If you need an in-person appointment, schedule ahead and bring required documents. The goal is fewer last-minute emergencies during a system shift for everyone. If you receive an overpayment notice under a full withholding policy, treat it like an emergency. Open the letter immediately and compare the dates and amounts to your records. If you agree you were overpaid but cannot lose your whole check, request a lower recovery rate and ask what hardship proof is needed. If you think the overpayment is wrong, file an appeal within the deadline. If it was not your fault and repayment would be unfair, request a waiver. Keep copies of everything you submit and record who you spoke with. Waiting is how people lose months of income. If you do one thing after this video, set up or secure your My Social Security account. Go to ssa.gov, choose My Social Security, and follow the prompts to verify your identity through the approved sign-in service. Use a strong password and enable multi-factor authentication. Once inside, review your earnings record for missing years or incorrect amounts. Check your benefit estimates, payment history, and Medicare status. Download verification letters when needed. Monitor messages and notices so problems do not grow quietly. This account is your window into SSA, and having it ready before you need help saves hassle. So remember the distinction. March 7, 2025 is tied to overpayment recovery policy, and that can affect whether your check is withheld if SSA says you owe money. March 7, 2026 is the start of a major internal SSA modernization that changes scheduling and workload distribution, not your benefit formula. The dates are close, the headlines are messy, and bad information spreads fast, especially online. When you hear someone say, "Your check will change on March 7, ask which year and which issue. Then verify through ssa.gov or an official SSA notice. Separating them prevents panic and protects planning today. If you found this helpful, share it with someone who depends on Social Security, because many people learn these rules only after money is missing. Leave a comment with your situation, especially if you have an overpayment notice, a pending claim, or questions about March 7, 2026. Subscribe to Senior Security Benefits so you do not miss the upcoming deep dives, including simple guides for appeals, survivor strategies, and Medicare timing. Staying informed is not politics, it is protection. I'm George, and I'll see you next time. Until then, check your account, open your mail, and verify claim through ssa.gov. One last reminder, the safest way to deal with Social Security is to be proactive. Keep your contact information current, report changes fast, and never assume a problem will fix itself. If you are approaching retirement, run benefit estimates at 62, full retirement age, and 70, and consider spouse and survivor options before you file. If you are helping a parent, set up access now, because emergencies are harder without it. If you are in a claim or appeal, keep a folder with letters, receipts, and notes. Organization is not glamorous, but it protects your income and peace of mind.